Happy Market Monday, traders. I am Rachel Deshelle, your host today for our Trader Talks webcast, and I am joined today by my good friend and colleague, Brent Moores. Brent, how are you doing today?
Hey, it's a good day, good beautiful morning to start off a new week, and happy to start off on Trader Talks with you, Rachel. And uh, everybody, I'm glad to be here and glad to talk about the markets, and good to see some faces in the chat.
Yes, it is an exciting one. I'm glad you joined me this morning, Brent, and we'll have a lot to talk about today. So definitely everyone stay tuned. We have a lot to cover in today's session. But first, I will say, please feel free to follow both Brent and I on X. He is Brent Moores CS. I am Rachel CS. We post a lot of charts and a lot of ideas out there for you on X. Please like this video and also subscribe to Trader Talks on Schwab Coaching. Now, before we dive into some of the charts today, let's discuss some of those important disclosures here. So the information that we're going to cover today is for general informational and educational purposes only and should not be considered any type of recommendation or advice. We're going to keep in mind that the paper money software application, we're going through that today, and we're keeping in mind that there are some differences between paper money and live. Now, as far as our agenda for today, we will talk about the general trend of major market indices. So we'll make sure we start there, cover those. We'll then dive deep into sector trends. We'll look a little bit at relative strength today as well. And then we'll take a look at several individual charts for trend in different time frames, identifying support and resistance, and talk about potential profit targets, stop loss levels in different time frames as well. So last thing I want to mention before we dive in, we do have some upcoming workshops and market drives. We have Boston this week. I know I'm going to be there. I'll be very excited for that one. Join with some of my colleagues here on the team as well. We have a Chicago market drive mid-May, and then end of May we have a Santa Clara Advanced Option Strategies event. So please put that in the chat if you guys are planning on joining us at some of those events. Those are a great way to kickstart or reinforce your education around options and technical analysis as well. So now, Brent, time for the fun. Let's dive into Thinkorswim and talk about what is going on in the market. So just starting with the S&P 500, what are you seeing here today in the charts?
Well, I'll tell you what, it's not surprising we're off a little bit, but not that much to start off the markets, Rachel. I mean, we had some news this weekend. We had talks between the U.S. and Iran, kind of, I guess, end without an agreement, and probably didn't surprise a lot of people. But the discussion of a blockade of the Strait of Hormuz came out. Oil prices, well, we'll take a look at oil and see what's going on, but I suspect it's probably still higher from where it was last night when I looked at the futures. So not a surprise we're having a little bit of a pullback in the markets. But just look how far the S&P 500 has come up over the past couple weeks from that low. I mean, the reality is on the situation on the ground, so to speak, hasn't changed that much. I don't know in in the Middle East. Yet we're up. What is that? 8% from the low. We're actually not. I mean, we're closer to the all-time high on the markets than we are from the little pullback that we had just a couple weeks ago. So a little bit of a sell-off, probably not a huge surprise to me. We're above the 50, we're still above that 50-day moving average there on that too.
Yeah, great points to call out there. I think it's funny that we are closer to those all-time highs than we were to those lows. We've had quite a V-shaped recovery, at least so far. We'll kind of see if we have a little bit of a pullback or support retest. We have that 50-day moving average right around 67.60. I think that's going to be pretty important for the market to hold that level now. And this entire gap that we had from last week becomes that entire area of support where we have that 200-day moving average hanging in there as well. One thing I think is notable here, and I wanted to put this oscillator indicator on the bottom of the chart to just show there wasn't only just a power move in the trend of the S&P 500 or the trend in the overall market from those lows. There was also a major breadth thrust as well. So I pulled out this McClellan oscillator, and for those of you that are not familiar with it, it essentially takes the difference of a 19-period exponential moving average and a 39-period exponential moving average of the net advancers on the NYSE. So it takes the 19 minus the 39, and it gives us these overbought and oversold levels. So you have overbought right around 100, you have oversold right around negative 100, and through there it is typically kind of those levels where you see from like reversions from those levels, especially this move back above oversold levels. So the move back above 100 is typically those times that you see those market bottoms or those lows in the market too. So I thought that was kind of notable that we're seeing that. And we're seeing a little bit of a cross today on that as well. But just to say that we not only had a power move with the trend, but we're also seeing that in breadth as well, where we had that little bit of participation there. So
yeah, there's a lot of ways you can look at breadth on the market. The McClellan oscillator is a great one, and I'm glad it's one we don't maybe talk about as often in these webcasts. So I'm glad you brought that up, Rachel. And so you can look at to narrow it down the S&P 500 equal weight. Now that's not the full breadth of the New York Stock Exchange, but so this is just the 500 stocks of the S&P 500, but it's also not giving that huge overweighting to the Microsofts and Apples and Nvidias of the world here. But I guess the bigger point is it's important not just to rely on one market cap weighted index, i.e. the S&P 500, to tell you what the whole market is doing, because as you look at different parts of the market, different parts outperform or underperform along the way. In this case, we're still seeing the little pullback in a lot of these, but the point is, hey, make sure you look at different aspects of the market, and that McClellan oscillators, I think, is a good way to do that.
Definitely. Yeah. It's not just the stock market, it is a market of stocks. So especially at some of those maybe oversold levels in the market, we want to see breadth thrust. We want to see participation kind of kickstart, especially when we have a bounce in the trend too. So a couple different things that traders may pay attention to as they look at this evolving market regime day to day. So let's take a look at technology. Let's take a look at the NASDAQ 100 index. I don't know about you, Brent, but I am seeing a similar thing here, a very similar type setup in NASDAQ as we did in the S&P 500.
Yeah, I mean, the deep dive, the deep V shape, we'll see what happens from here. Could this turn into a inverse head and shoulders? It could. I think it's too early to say that, but we kind of had the bottom right there where we're coming down, yeah, and then we broke up, and we probably have a resistance a little bit above that 25,000, I don't know, 200 level or something like that as well. But I guess the point being, we'll see where we go from here. But it was kind of a similar thing, pullback, a little pullback today, minor pullback today, about 0.3%. That's not much, to be honest. I was expecting a little bit more, but shows what I know. And it would take quite a bit, it seems like, for us to go back to those lows that we hit 2-3 weeks ago there, Rachel.
Yeah, definitely. And I know right now, especially, the market is just reacting a ton to a lot of this headline driven action.
It
So
is.
possibly something like a new headline or something like that could be the catalyst for either upside or downside momentum. But as traders, we still want to focus on the overall trend, try to eliminate noise as much as possible. And it looks like we did hit a little bit of resistance here just in the short term. If I
Yep.
just kind of make a little bit of a rectangular pattern here, just showing that little zone of resistance that we hit our head on just last week. So I think it's a valid zone of where we may see a little bit more supply than demand, just since we have had quite a bit of a run, like you mentioned, Brent, over the last 2 weeks, maybe a logical level to have a little bit of a pause.
Yeah, and I think it's a good point you brought up, Rachel. This is a headline-driven market. I mean, sometimes the news isn't driving the market as much as it is now. And right now, it is largely news driven out of the Middle East and the situation with Iran right now. But of course, we're just on the brink here. We're just starting earnings season, and corporate earnings results can affect the market, both on an individual level, particularly with individual big, large cap companies. NVIDIA or Apple can sway the market, but just the kind of the overall accumulation of, are we having a good earnings season? Are corporate profits good? Are they trending in the right direction? Or are they bad? Are they not? Are we having a lot of misses? That can wear on the market. Because if you think about it, one way to assess the market is like market valuations, okay? How expensive the market is. And the most common way we do that is we look at things like a PE ratio. Well, if the E part of the PE ratio is going up, in other words, the E part being earnings, if corporate earnings are going up, then that tends to reduce market valuations. It tends to help support the market. If the earnings part goes down, then people are more apt to say, hey, our market's a little frothy, our market's a little bit overvalued right now. So there's a little bit more of a headwind in that case. So yes, obviously, there's one huge headline risk we have right now, but some of these other things like corporate earnings and inflation numbers and labor reports and stuff like that, that certainly can affect it as well. So we'll just have to look for that.
Yeah, you're definitely right, Brent. I mean, we have a lot of different factors that obviously impact what is possibly going to happen in the markets. Now, the next thing I want to kind of pivot to would be the Dow Jones Transports average. So this one I thought was kind of notable, Brent, because we have the Dow Jones Industrial Average still hanging right around its 50-day moving average, kind of like some of the major indexes as well. But we have the Dow Jones Transportation Average really, I mean, right next to those all-time highs that it just made. And I think that divergence is quite notable, especially for Dow theorists here.
It's crazy to me, Rachel, looking at this chart. We're right next to all-time highs on this. What war, what gas price, thing that's going to possibly, affect a lot of just companies, inflation overall, and also transportation companies possibly. But, the number, that's why I think you mentioned a few minutes ago, hey, we can get caught up a little bit in the news, but the technical analysis is something that we can use regardless of what the news is and see what we're doing. And what we're seeing right now is strength on this. I mean, if you look at the RSI on this, yeah, we've just dipped below that 70 level, but that run up is very strong right now. But I mean, I think the broad bigger picture is, yeah, just look at where it is compared to its all-time high. Now, for those who aren't aware, Dow Transports is one that has traditionally been kind of a key market indicator because, hey, transportation, the stuff bringing people and goods around our economy has traditionally been seen as kind of a key indicator of economic health. Well, if that's the case, I mean, that's relatively positive here, or either that, or maybe it's an indicator that's totally wrong in this case. But the Dow transport is heavily looked upon for that reason. It goes back to old Dow theory, which is kind of a classic way of looking at the market.
Yeah, exactly. I think it's incredibly powerful for Dow theory in particular that the transports, even with all these blockades, the negative headlines, all of this kind of stuff coming out, we still have transports up at right near all-time highs. And those are kind of what we need as far as, like you said, to move those goods that are being produced around. And the fact that we are still being able to move industrial goods around the country with no problem whatsoever, it seems like, then that would be, in this case, a bullish sign for the market and for the economy here. So this is looking like more of a bullish type of divergence between the industrials and the transports here. So it's interesting.
Yeah, it does. And just, the US is a little bit in a privileged situation in the sense that we are less dependent on global oil than most other countries because we have a pretty strong oil supply here, domestic oil supply here. The oil we depend on isn't coming out of the Strait of Hormuz. And also, just from a technical standpoint on this, we had some highs back in February, March area. Is that a potential kind of now support level for this? Are we going to pull back? Is that going to help us out at all if we do pull back here? We'll have to wait and see, but that's what that's kind of one aspect of technical analysis I'd be looking at on this. And just in terms of the overall kind of trend, we've got the 50-day and the 200-day moving average here sloping nicely, and they're not just sloping nicely up, but the index is well above that too.
Exactly. I think, like you mentioned, this support, this old resistance, now new support, is going to definitely be an important pivotal level here for the transports to hold throughout the next few days, next week or so. I think if we get a breakthrough that, that next level is definitely going to be that gap from the 8th or so. And if that closes, that becomes an exhaustion gap. So keep an eye on some of those levels on the Dow transports there. Now, another one that I found interesting, especially since we have seen the I guess recent deterioration over the last few months of just the tech sector in general. I think it was notable that the Philadelphia Semiconductor Index is reaching these levels near all-time highs, despite even just kind of the weakness that we've had recently. But we know that tech just the last 2 weeks or so has been a little bit of an outperformer here. So giving a little bit of rotation to the semiconductors here.
Yeah. And, so all tech is not created equal. Semiconductors are looking spectacular. Software has been just kind of obliterated this year, and I think the latter part of last year as well. But, a lot of people look to semiconductors here as a kind of, a big part of the economy. And what you can see here is just the strength in semiconductors. And this is your AMDs and NVIDIAs and Microns of the world here. And that's, I don't know what else to say on that. I mean, we're up right near 70 on that RSI, just showing how strong the run has been. And will new developments in the Gulf affect us? Well, right now, this doesn't seem to be overly concerned with that, it seems like.
Yeah, definitely not. At least it doesn't appear that way. Today we're seeing a little bit of a doji candle, a little bit of a spinning top possibly. So with an inside bar. So this entire range today so far is trading within the prior day's range here. So it could tell us that this may be a little bit of a pause. If we see follow through tomorrow to the downside, it tells us, hey, this formation could be a little bit of a short-term reversal here. But if we do see a little bit of follow through, we could see this level of old resistance, new support really become that kind of target zone for possibly a retest in the semiconductors if we do have a little bit of a pullback. But like Brent, like you mentioned, seeing the RSI reach overbought indicators isn't a bad signal. It's actually a good signal in an ongoing uptrend. Typically, traders do want to see the RSI, do want to see momentum reaching those overbought levels because it just really confirms the strength of this trend. So let's move into something else. I know we've mentioned the Strait of Hormuz and oil quite a bit just over our talk so far this morning. And let's throw up crude oil on the chart just to maybe note out some important levels here. I know one of the things I had drawn on the chart here, Brent, was this rising channel that we've seen where we have this pretty straight trend line to the upside showing a level of support. And then we have that resistance to the upside there where we really got rejected that last time. So price seems to be trading in this rising channel, but what are you seeing here?
Oh, first of all, I want to point out you have a 90-day 4-hour chart on there. I love looking at different time frames because you can do it. This is how you change it. You just go to the top of the chart and you can change the time frame just like that. And so use the time frame that gives you the clearest view of things. And so this is a perfect chart for that. Nice channel you can see. And I think it just gives us a clear indication of what we're looking at right now. And the technicals can help you make decisions in the market. It's not a guarantee things are going to go up or down or whatever, but this gives you a nice view of that. And so if we do get a pullback, not only would you expect perhaps some support from the lows we've had there, but also once we hit the channel line, that's another level of support. So there's different levels of finding support on here. And so those are areas we could potentially see support. But right now, I mean, hey, oil's down the last, I said I looked at it last night, oil futures. And by the way, when we talk about futures in this, we're not talking about trading the futures here in this webcast. We're just talking about the price of futures, the price of the commodity we're talking about, in this case, oil. And so it's kind of if you're just curious and want to know, hey, what's oil doing? And it's a Sunday night or something like that. And you can't look at your favorite, I don't know, ETF or whatever you normally look at to see, well, hey, you can look at the futures and see what the price of oil is. And I looked last night and it was higher, and hey, it's actually pulling back a little bit right now. And of course, that is right now, higher oil prices are going to be a drag on the market. So the little pullback is only going to help the market.
Exactly. And this is, we're seeing right now a little bit of a short-term gap fill. Like you mentioned, we may see a level of support at these recent lows, which also kind of corresponds with the lower part of that range, right around 95 or so. Then if we break through that, we may find another level of support around 90. I think a lot of traders may look for some of these short-term lows to be taken out in crude oil to essentially say that, hey, there is a possible change in trend here. So if we start making new lows, and then of course, and that corresponds with a new lower high, that could tell us that first signal of that early change in trend. So these are going to be two real short-term levels to look at. And then the other one would likely be right around like 86 or so. That would give traders that indication of that little bit of a break in this uptrend that we have been seeing, which could ignite bullish fuel for equity markets, because the biggest link here is when you have higher oil prices, that's going to put pressure on rates. Obviously, the pressure that we've seen being put on rates is market doesn't necessarily like that. So it hasn't really liked this relationship that it's had been trading with crude oil recently. So if we can get a little bit of downside pressure here in crude oil, that may further ignite a rally in equities too.
No doubt.
So let's take a look at the sectors. So we're going to move to that next to see what we're seeing in the sectors. And I wanted to actually pull out this familiar relative strength grid that we tend to look at in this class to just kind of give us an insight on how these various sectors are performing relative to the overall market. So this grid will take each individual sector and basically create this ratio line of that sector to the S&P 500, and that'll give us an indication if that sector is outperforming or underperforming the overall market. So this typically gives us a little bit of hint as to what is to come next. So typically you do see weakening in relative strength or strengthening in relative strength or repair there before you see a possible downturn or upturn in absolute performance for a stock or sectors as well. So Brent, when you're looking at this grid here, is there anything that sticks out to you just about just the relative performance of some of these sectors and what we may be seeing in the market?
Well, so yes, but let me mention this. This is a great chart, and just to make it clear, at the risk of repetition, this is not charting the price performance of the index. This is charting the relative performance. So it could be going up even though it's actually going down. The actual index itself is going down a little bit just because it's outperforming the S&P 500 and vice versa. So this is all in relationship to the S&P 500. One, energy. I mean, just look at the top left. We got energy, which, not a surprise, was just gangbusters outperforming for a while, but that certainly is starting to underperform. Materials is kind of has been, over the last month, the actual top performer in the among the sectors over the past month. There, materials has been, and so that's another one. Look also, I would say, maybe at financials, the turnaround. The financials were vastly underperforming, but have they kind of caught up a little bit? They're kind of caught a bid, so to speak, and are starting to show some strength there. So this is a great chart. And by the way, if you guys, Rachel, I know you've shared this chart in the past. If you have this and you want to look at it, sometimes I'll look at this where you can look at each individual grid as a full chart. For those of you who aren't aware, you can do that. And Rachel, show everybody how you just did that.
So an easy way that I just did that, I just clicked on this little ribbon. So find an open space on that bar, and if you double click on it, it's just a shortcut to maximize that cell. You find that little ribbon again at the very top here, an open space. You double click again to unmaximize the cell. Another way that you could do that is with this 3-line menu. It's just a couple more clicks. I know traders like to be quick about certain things, so that's a little hint there. And then I shared that grid in the chat with you guys, those of you that do not have that. So that is not guaranteed for accuracy, timing, or results. But I think I would definitely agree with what you mentioned there, Brent. We've had strength in some of these more late cycle type leaders. I think it is notable that we are having a little bit of a bottoming formation in financials. I also think this formation setting up in technology is interesting too, where we have this rectangular shape or this triple bottom of tech relative to the S&P 500. So maybe a reversal here, at least in relative wise, with tech to the S&P, to the overall market.
Yeah, so this is, there's a lot of different ways to look at the market. You got to find what works for you, and because you can't do everything. But this is just a slick chart and a easy way to look at the market, and I think a lot of people find it helpful.
Definitely. Well, let's switch to charting some of these sectors as well. So, Brent, which one do you want to look at first?
Here's one that maybe we could look at. Let's look at staples for a sec, because it has actually been one of the worst performing sectors. In fact, let me look. It is the worst performing sector over the last month, actually. And so the question is, I think, is this kind of a bear flag? We've kind of stair-stepped down. We've had lower highs. Are we going to continue to break? But we've had some strength over the last couple of weeks, just with the rest of the market. Is it going to be strong enough to break above your trend and break above the around the 964 level where we had the highs there before? Is that going to be a meaningful reversal of the trend? And I guess I should mention the 50-day moving average is the same level, basically. So if you're breaking above those, that may show a meaningful change. But right now, this has obviously been more weak. And it is interesting as well, staples typically performs better when, on a relative strength basis, when the market is struggling as a whole, when there's more recessionary concerns on this. And the fact that it's actually been underperforming a little bit is of interest to me, because it shows, at least one way to interpret that is, hey, people don't have huge recessionary concerns out there, or else you'd expect probably some outperformance on staples versus some of these other sectors.
Yeah, I agree. I think that is super notable, even with the sharp kind of sell-off we had, or not necessarily sharp sell-off, but where we broke through levels of structural support on the indexes. We broke the 200-day moving average, but yet staples still lagged. And typically that is, like you mentioned, it is a defensive sector. It's almost like a safe haven type sector in the market. Yeah. The fact that it actually was thrown back to these levels of old support definitely can tell a lot of traders that, hey, the market isn't necessarily getting defensive here, because defensives aren't necessarily outperforming,
yes,
at least as of recent. And it looks like it's getting rejected quite again, making lower highs, lower lows. So it may look for, again, that retest of that old resistance, new support here.
Yep. So I think that's an interesting one. And if we want to look at some other sectors, here's another one that I think is interesting. I know we discussed IT, but let's look at IT here for a sec, just because I want to show you we've broken through both of our 200 and our 50-day moving average. And if we had a 20 on there, we'd have broken through the 20 as well. So showing significant strength, you can see the downtrend. I think that's a little more clearly visible on this. But we've actually gone above, and we're kind of right at that edge there right now. So we'll see where we go from here. But and it wouldn't surprise me to have a little bit of a pause here on this, but that would be a pretty significant break. Now, as we mentioned before, not all tech is created equal. You have software on one end and you have semiconductors on the other, and they look vastly different. But just IT as a whole, that's what we're looking at there.
Yeah, it's we had that almost like a little bit of false breakdown here in tech, and then if we connect some of those recent highs we're pushing up to a little bit of resistance here, but we are still holding, like you said, on that 200 period moving average. We've reclaimed some of the shorter ones as well. So yeah, we're going to have to see if those semis can carry us higher here, if software keeps falling to the downside, making new lows. Another one that I thought I should point out here is utilities. Now this is kind of an interesting one. It's again one of those more late cycle type sectors, but I think the biggest link here is probably utilities to energy here, where we're seeing that structural surge in demand for AI and things like that, where it obviously gives a little bit of life to this utility sector. But I thought it was notable that utilities just last week made new highs here, and now we're pulling a little bit back from that, but still really close to those highs in utilities.
Yeah, and the little pullback probably isn't surprising. I'm not just given the whole overall market, but after you've run up that strongly over maybe a 3-week period, it's kind of, you almost expect a little bit of a breather along the way, especially when the run up corresponds to where our highs were before. So that's not a bearish sign just because you have a short-term pullback on that. I would consider that to be a relatively bullish pattern right now on this chart right now.
Definitely. Any other
Let me just mention one more, because we're kicking off earnings season with a lot of financials. So if we look at the financial sector, and just keep in mind, things change. Things change when news comes out. Often the technical analysis doesn't predict news. We don't know what news is going to happen. We don't know what earnings is going to be on some of these financials companies. So whatever technical analysis we talk about here on this, it's probably more susceptible to change on financials than almost anything right now, because we had Goldman Sachs earnings this morning. We've got Citigroup and Bank of America and BlackRock and JP Morgan, and go on, the list goes on here. Coming out this week in the next few days, started out with Goldman Sachs this morning, and that can all affect that financials group there.
Exactly. Yeah, and one of the biggest catalysts, I think, too, that I think you're going to see, because obviously the last couple months you've had quite a bit of pressure on rates just because of the prices of oil. So it'll be interesting to kind of see these earnings in the financials and see how higher rates may have impacted their bottom line as well. So Goldman Sachs being one of those, as we're kind of transitioning into some of those individual stock discussions. I know Goldman Sachs had earnings this morning. Brent, you mentioned earlier that they beat on top and bottom line here, and there looks like they had a little bit of an island reversal here. So this is typically where you see a gap up, you have a couple bars here, and then you have another gap down, or it can be vice versa as well. And so island reversals are a pretty powerful signal here that just kind of shift, hey, there is a reversal in this trend here. But it is finding this notable level of support right around that 50-day moving average. So I think that's going to be crucial for it to hold. If it breaks through that, you may see that pullback all the way to the 200-day that was tested a few weeks ago too.
Yeah, so that'll be significant. And keep in mind also, sometimes these can affect other companies there. When you have one company in a particular industry group, often it will, even though that company hasn't had their earnings, the Goldman not having having a negative reaction can certainly affect some others. So we can look at like Citigroup and see what it's doing here. I don't know exactly what we're doing here on this, but a lot of times you'll see a little bit of pull. Now, it's not going to be as much as a pullback on Goldman, because they're not the ones that are reporting their earnings here. But sometimes you get kind of that carry-on effect to the others in the industry. But they're holding off. They're down 0.5%. Looks like those two that we looked at there. But again, kind of you have that gap up a few days ago. We'll see. The top of that gap there can act as kind of a support level on it. And yeah, right there. And so we'll see if that holds. That's obviously a bullish sign for that.
Yeah, definitely. I think it was interesting that we had this inverse head and shoulders pattern. I know I was looking at one of those. We had the left shoulder here, the head, the right shoulder, and we had a gap up above that early level of resistance on its way to make new yearly highs, and then we're kind of back underneath that level of resistance here. So like you mentioned, Brent, that entire ledge here will be this gap of support, and that earnings announcement is tomorrow before market. So if they do have some type of gap down reaction like Goldman Sachs just had, that would give this signal as an island reversal, which would be a pretty powerful signal for the possible end of this trend. But of course, we got to await that. Now we have a couple more here. I thought this one was interesting as well. So CoreWeave was an analyst upgrade this morning. Macquarie upgraded CoreWeave to outperform from neutral from a price target of 125 up from 90. And Brent, this one got me a little bit excited to look at this because I noticed 3 different things with this chart. So I'm going to show the anchored VWAPs here. I'm going to hide the 50-day moving average as well and just take this time frame out to when it first started trading. And I thought this was pretty notable. So we had the anchor VWAP from all-time highs here in CoreWeave. We also had the anchored VWAP from the first day of trading. And those two intersected at the same level that the 200-day moving average was sitting here as well, which gave quite a powerful kind of a level of resistance that Friday really knocked its head into. And it looks like today we're having that move above all 3. So that may tell traders that that's a pretty powerful signal when you have that anchored VWAP squeeze and 200-day moving average happening at a confluence with a break above that.
Yep, no doubt. So clear break, some strength out of CoreWeave. That's kind of a cloud tech stock there. So going back to our prior discussion on IT and this is showing some strength here on that as well.
Yeah, may see a little bit of resistance here at 114 and then maybe another gap here at 125, but definitely a couple levels to watch here, but that is notable. And then last one here, we have NBIS. So NBIS just had an analyst downgrade. Actually, Freedom Capital downgraded Nebius to hold from buy with a price target of 154 up from 108. The firm cites valuation for the downgrade, saying the shares have risen farther and faster than it had expected. And the market looks like it's disagreeing with this analyst downgrade.
I was about to say, Rachel, yes, the market it doesn't seem like it could care less that it was downgraded, because it's up 4% today, and I don't know. But breaking above potential resistance levels, if you want an idea of is something going strong or not, look at the RSI, and if you're above 70, it's going strong there. And it doesn't mean it can't pull back, and it often will have a consolidation period after such a strong move up. But right now, hey, downgrade schmowngrade, that thing is strong. And again, another tech company.
Exactly. Yeah. So we looked at a ton today. I know we're coming at the end of our time, Brent. It was great to have you join me today. It's such a good discussion about really a lot of major things that are happening in the markets, major levels and things like that that traders will be watching. Now, you can follow Brent on X at Brent Moores CS. I am Rachel CS on X. Again, we post a ton of different charts, updates there. And thank you everyone for all of your engagement in the chat today. This was a great discussion, and thanks for helping us out in the chat there. And if you like this video, please give it a thumbs up. Please subscribe to us on Trader Talks at Schwab Coaching. But thank you all again, and I hope you all have a great rest of your week.